Hello. Thank you for joining us in the Evelyn Y. Davis studios at the National Press Foundation. I'm Linda Topping-Streitfeld, Director of Programs at NPF. The talk today is about financial literacy, what young people know or don't know about money, about credit, about banking, and more. With me to talk about it are two experts. Gail Hillebrand is from the Consumer Financial Protection Bureau, and Hadley Malcolm, personal finance reporter for USA Today. Thank you both for joining me. A little housekeeping first. The National Press Foundation is a nonprofit. We're based in Washington, D.C., and we run programs that help journalists report on complex topics. Everything we do, webinars, half-day, 4-day, even 10-day programs, are free for journalists. If quality reporting is important to you, I say prove it. Click the donate button on the homepage and follow the instructions. You also can find your way to the NPF store where you can buy t-shirts, mugs, iPad covers, and more with all of our great logos, including the very adorable Newsboy. So thank you in advance for your support. Everything we do at the National Press Foundation is on the record, and we want to include your questions. Today, you can type them into the chat box just below the webinar screen. Just log in or sign in as a guest. I'll be monitoring the questions, and we will get to as many as we can. So, Gail Hillebrand, I'd like to start with you. Your agency, the Consumer Financial Protection Bureau, hasn't been around that long. When did you get up and running?
July 2011.
2011. And in the very brief span, the agency actually has done quite a bit. You have a lot of initiatives out there. I know you have some introductory slides that are going to give us an idea about everything the agency does. So why don't we take a look at those, and then we'll focus in on this aspect of financial literacy.
Terrific. It's such a pleasure to be here to speak to journalists because people look to you for information. And I'd like to make sure you know enough about the Consumer Financial Protection Bureau to see what we have for your readers and for yourselves. Linda asked me to give you a brief overview, so I'm going to describe our mission, highlight some of the outcomes we've achieved for the public so far in our first 3 years, and then identify a few of the services that we offer for people seeking financial information. The CFPB, as you know, was created out of the financial crisis. And the financial crisis was complicated, but it was rooted in many consumers being sold mortgages that they did not understand and could not afford. There was not enough consumer protection and also not enough consumer understanding of the consequences of choosing certain types of products or features. And we all paid for that in our home values and in the effects on the economy. So you see here the mission of the Consumer Financial Protection Bureau is to make markets work for consumers and for honest businesses and providers. It's to make markets work by making those rules more effective, by consistently and fairly enforcing rules with bank and non-bank, and by empowering consumers to take more control over their economic lives. And our financial education work falls in the empowering consumers. I'd like to show you a few pictures of what the CFPB has accomplished for the public so far in its first 3 years. We've strengthened the mortgage market with a package of new rules required by Congress that took effect in January of this year, 2014, so that borrowers are treated fairly when they take out a mortgage, when they pay down their mortgage, and also if they run into trouble. We've created the first oversight program for non-bank entities so that whether the service is provided by a bank or a non-bank, they're treated the same and they have to comply with the law in the same way. This supervision function is very important. It's quiet, but it does create a real incentive to pay attention and to internalize the issue of compliance and make sure that everyone is following the law and consumers get a fair shake no matter who they do business with. And finally, in the enforcement space, we have brought cases, sometimes alone and sometimes with other regulators, that have put $4.7 billion in refunds or other types of relief back into consumers' pockets, and 15 million consumers have received those refunds or relief to date. On the financial education side, we have some things people can use. Consumers can complain to us at 855-411-CFPB, and they can also go to consumerfinance.gov to file their complaints. We've handled over 400,000 of those complaints so far. And I'd like to tell you a story about some consumers who were helped by contacting the Bureau. This is a story about Ari and Harry. So Ari was about to deploy to Iraq. He asked his father Harry to take his power of attorney and to watch out for his finances while he was off in the combat zone. And Harry, of course, agreed to do this for his son, but he started looking into his son's finances with the power of attorney. Harry noticed that Ari was having some financial difficulties with a car loan he had received before he deployed, and Harry started really looking into the details of that loan. The more he learned, the more concerned and upset he became. So Harry wrote a letter to the Tell Your Story function at the Consumer Financial Protection Bureau. And here's what happened next. Ari's loan prompted the CFPB to start an investigation of this auto loan program that was targeted to our nation's service members. And Harry's story ended up helping launch an investigation that resulted in the bank and the non-bank entity giving refunds combined $6.5 million that went back into the pockets of 50,000 service members. And needless to say, that loan program and the features that were of concern are no longer available in the market. So all of America's service members got that protection of a change in practice. This is an exceptional example of the impact that's possible when consumers come to us and complain. But we also hear regularly from consumers who say, I finally got someone to tell me what was going on with my account after I complained to the CFPB. So I hope you will send people to us at 855-411-CFPB. We also believe in financial education because if consumers can answer some of their questions before they make a financial choice, they might not have to complain to us. So you will see here an education service called Ask CFPB. And this has questions and answers for about 1,000 commonly asked financial questions. People can search by topic or they can search by population, such as students or older Americans. And we even have something for parents who want to talk to their kids about money, which you can find in the tags under Money Basics and under Parents. You'll see that same service in Spanish for those of you who are serving a Spanish-speaking population. Again, highlighting how to complain and the questions and answers. We're also developing a series of tools tied to the big life decisions that have a money component. And this is the first one. It's called Paying for College. It starts with college selection. The heart of the tool is a comparison engine that helps young people and their families to input their financial aid offers and then compare the schools side by side and find out if I take this offer and I borrow whatever money is not being provided in this offer, how much will I pay in loan fees every month, month in and month out for the 10 years after I graduate. And Paying for College goes right through to repayment. So for all of some of you perhaps individually and all of your readers who are still paying back those student loans, it has some information on what to do if you can't make the full payment and what federal programs are available to sign up so that your federal student loans can be paid off at a slightly different rate of payment and still protect your credit, which is actually very important for young graduates facing an uncertain economic situation. Paying for College has another feature. We are trying not only to help those individuals in this moment with this decision, but also to help build their confidence and their skills in asking questions and seeking information, because we aim to turn them into lifelong shoppers of financial services. I'm going to turn now to the study that we told you we'd talk about, the so-called PISA study. And these are the results. This is a study of 15-year-olds in developed countries. 18 either countries or major cities in those countries took part. And we found out that Americans age 15 were in the middle of the pack. A lot of them were struggling to answer fairly simple questions. Levels 1 and 2 were kind of just below proficiency. And so at 18% of people in America at age 15 could say, yeah, I recognize that. That's an invoice. And 26% of them could read the invoice well enough to figure out where the delivery charge was. But as the questions got harder and were more about how do I decide between this choice and that choice, we saw a big fall off. So 44% of our U.S. students were only at levels 1 or 2. And this actually put us in the middle of the pack internationally. We were clustered with countries like Israel, France, and Spain. Also, a number of Eastern European countries were clustered in there with us. We were passed and surpassed by Shanghai, by Australia, New Zealand, Estonia, and the Flemish-speaking portions of Belgium. And I think this just shows how much work we have to do to help our young people really get ready for a good financial life. So I think we're going to pause there, take some questions about PISA, and then we'll come back and talk a little more about financial literacy and what can be done.
Yeah, I really want to talk about this survey. Hadley, you cover personal finance for USA Today. Did the results of this survey surprise you at all?
You know, I come across so many surveys almost every day, it seems like, talking about whether young people in America are financially literate. This obviously is the largest scale one that has been taken on and kind of the most, I guess, official. And you know, I don't think it is that surprising, unfortunately. You know, everything that I've written about in the past does show that we do have a long ways to go in getting people to a degree of financial literacy that our economy now requires. And it's not just young people either. It's all age groups.
Right. Every journalist out there knows that you should never write about a survey or any other document until you've actually read the survey or document. So we often find that some of the most interesting things are deep in the details. Did either of you find anything striking, particularly in the details of this survey, any aspect of it that stood out?
The two things really stood out for me. One is we did not see a gender gap. Young men and young women did similarly in the U.S. In some other countries, young men did better, and in some other countries, young women did better. But here, they seem to be about neck and neck. We also had about 10% of U.S. 15-year-olds who scored at the top, who really understood about money and how to think about it. And that suggests to me that we, with hard work and lots of effort at all levels of society, we really can do better for all of our kids.
That's good to know. Hadley, in your reporting or in the people who contact you, do you find a difference between men and women? Do you get asked questions more by women or men, or is it about even?
I don't think I've ever noticed that. In particular, I think that in just the stories that I've written, I maybe have spoken to more women than men. They might be more willing to talk about it, or talk about where they see their skill level or where they think they should be at this point in their life as a mid-20 something or early 30s. But I haven't seen a huge difference, no.
Mm-hmm. Good to know. I thought one of the disturbing things about this survey for me was the big difference in literacy between people at the top of the income scale and people at the bottom. Can either of you talk about that a little bit?
The U.S. was not the only country that had this result, where kids in lower socioeconomics did not do as well. Some of it seems to be correlated to math and language abilities or skill levels, but not all of it. Some of it just seems to be about money. We think it's important that kids have a chance to learn about money by touching it, by handling it. The study also showed us 69% of American 15-year-olds say, I have earnings from somewhere, whether it's babysitting or regular job or something in family business. So kids are bringing money in. Only 51% of them had a bank account. There's an opportunity that we can deal with. And we know as adults, sitting in a classroom is not the best way to learn. It's what you do. And maybe sometimes a few mistakes that you make that help you learn. So giving kids chances for hands-on learning with money is going to be really important.
When we talk about financial literacy, learning about money, what exactly are we talking about? What are the elements of financial literacy?
I think that it comes into play, it's almost so simple because it plays into your daily life that it's hard to actually identify probably day-to-day things, but it's, the ability to log on to your online bank account and know what you're looking at and know how to make a transfer, knowing how to set up, a rent check to your landlord. It's all of those day-to-day things that really are essential to getting through your life, and they may seem kind of mundane, you don't really want to deal with them, but they are so critical to having success in other aspects of your life as well, because if you miss that rent check, you're going to be in trouble. If you miss that credit card payment, you're going to be in trouble again. These are things, finances are something you have to stay on top of every single day. And I think that that's what financial literacy means, understanding how to manage that successfully.
Right, and understanding the cascade of bad things that can follow when you miss one payment.
Exactly.
A lot of people are now talking not only about financial literacy, but about financial capability. And the reason they talk about capability is there's knowing what to do and then there's actually doing it and learning from how you do it. And the financial capability piece is, can I get information, evaluate whether that information is truthful or comes from a biased source, use the information, make plans, and then really act on those plans. And it's that last piece of acting on the plans, which is why people need chances to talk to their friends and family about it, need to learn about it at home and in school. It's hard to stick to plans of all kinds. And that's a key part of financial capabilities, being able to make those financial plans, take control of your financial life so it actually serves you instead of being one more hurdle in your life.
That brings me to another question, which is, we know from other surveys that 14% of people in the United States don't even know how to read. What is the relationship between literacy and financial literacy?
The PISA study, so the international study, suggests that there is some correlation between language skills as well as math skills and financial literacy, but it's not 100%. A big chunk of financial capability is about making choices between, am I going to do it now or later? Am I going to plan ahead for some of my big life choices and goals? And you don't need math skills to do that.
That's probably true. One of the sample questions in your slides actually referenced an invoice, which I don't think most 15-year-olds in this country have ever even seen an invoice. It seemed like almost an old-fashioned kind of question. But I thought, an analog for that might be when you order something online and you see that final screen, you see the price, and if there's a shipping charge, it's in there, and so forth. How much is financial literacy related to our ability to shop online, which is something more and more of us are doing?
I think it completely is. It aside from the, I guess, more serious parts of your financial life, like managing your bank accounts and paying off debt and bills, we make decisions related to money every single day, whether that's, I'm going to go to the farmer's market today. I need to make sure I have cash because they only take cash. A lot of the farmers only take cash. Or I really want to save up for an iPad. Who's going to offer it to me for the cheapest price? And where can I find a coupon code? And, it's knowing kind of how to be savvy about those kinds of decisions just as much as it is knowing to pay your bills on time.
Mm-hmm. And that thing you see online that tells you exactly what you're going to pay, that actually is an invoice. It's just we don't print them out anymore. We look at them. But if we don't look at them, we can be very surprised when we see those shipping fees. And if you translate that to other kinds of products, we can be very surprised when we see how much the product really costs with the day-to-day and month-to-month fees that pile up.
Right. It's interesting because, Hadley, you're talking about elements of being savvy with the internet, and with money and with your bank accounts and so forth. And when I think of financial literacy, I think about it in much more old-fashioned terms. Understanding interest rates, compound interest, negotiating a mortgage. Are we beyond that? Have we just expanded the...
We're not beyond it, but financial life has gotten more complicated and people need more skills to deal with it. And as the products are changing, in some ways it's more important to know what the questions are than to know what the answers are. How am I going to use this product? How much is it going to cost me over the long run, the way that I'm going to use it? Are there any hidden fees? Are there any other surprises? You need to know that even more than you need to know what's the best checking account today, because the best one tomorrow might be different.
You brought up checking accounts, and I wanted to talk about the fact that Walmart recently announced it is going to go into the banking business in partnership, I think, with someone else and offer a very low interest checking account to almost everybody. I'm sure there will be some unbanked people who still aren't going to be able to qualify, but I think the pool of people who will be able to get bank accounts is going to be much larger. Do you have any thoughts about what impact that might have? Is that a good thing, a bad thing? If you're financially illiterate, should you not have a checking account? What do you think?
I think what they're doing is really interesting. And they've been rolling out new financial products pretty frequently. I mean, and not even just Walmart, but all sorts of non-bank entities are now kind of entering the financial space with prepaid cards and alternatives to typical financial products. And we do have an issue with a portion of our population that are outside the banking system and don't have access to the kinds of products that you and I probably do. So I think that, I don't know if I can comment on whether it's a bad thing that we're opening up those accounts to people that maybe aren't prepared to handle it. I mean, obviously I guess that's not ideal, but I do think that there's something interesting going on with regard to how all of these companies that aren't banks are trying to target this market that banks haven't been successful at, turning into customers.
And there are some new techniques that weren't available maybe 10 years ago. If someone had a problem with a bank account before, you can sign up for a low balance alert. You can get the entity to tell you every single time your balance goes below the number that you set. That's going to really help people who might not be accustomed to balancing their account to find out, how am I doing? And you really do have to keep track of how much you're spending through all the different ways we can spend now through our bank accounts. But if you can do that, it can be a good product for people.
Okay, we have a question coming in. How many states require high school students to take financial literacy classes? I don't know if either of you knows the answer to that, and should it be a requirement, which is the corollary.
So I have some of that information. There's a report done every year by the Council on Economic Education, a non-governmental group, and they report that 17 states require a class in high school for graduation, and that 35 states have some kind of standards for including financial education somewhere along the way. That's less than half our states that are requiring this now. So there's still some hard thinking to do, I think, around the country. Our schools are busy and have lots of demands on them. We think one of the possibilities here is to offer training to teachers who want to work this into their classroom, whether it's math or language arts or even history, given what we've just been through with the mortgage crisis, to talk about money issues. But most teachers in America have not yet been offered that training. And so we think one really good first step is to train America's teachers who want to bring this into the classroom to help them do so.
I've actually covered the CE report a couple times, and it's interesting because when you really look closely at all of the different breakdowns they do of states that require a class versus states that just have a standard that has to be met versus states that actually require students to take a test that they have to pass. There's all these different breakdowns about what a state actually requires schools to do. And especially with regard to the standard, states that have a standard that has to be met, everyone interprets that differently and implements it differently. And in a lot of cases, it just means that there's a financial literacy component added into a different class that's not actually dedicated to financial literacy. So there's a huge spectrum of, in terms of how states are choosing to implement financial literacy education. And it's hard as well to say that we should require it across the board, because I've asked that to states as well. Why not just require it? And there's funding issues, there's getting teachers trained, and there's fitting it into the school day. I think there's a lot of logistical issues that we don't really think about when you don't work in the education system, that schools are coming up against in terms of trying to implement more financial literacy classes.
Can either of you point to other programs that are working? Maybe not specifically in-school programs, but are there other programs to help develop financial literacy that are working across the country?
So I'd like to talk about an approach. It's not a particular program run by one particular entity, but there is good research now showing that if young people have savings accounts, particularly in their own names, it affects their likelihood that they will actually attain their ambitions to go to college. So there's a study showing that of young people aged about 15, the ones that have savings accounts in their own names were 6 to 7 times more likely to go to college and graduate than those that did not. And that was after controlling for family income. It wasn't about how much money was in the account. There's something about having that account and thinking about yourself as a person who's saving for your future that changes the way you think about yourself and the way people around you think about you. And that made a real difference for those 15-year-olds.
I don't know I can't speak to how successful these programs are in terms of actually eliciting results, but I know that there's a lot of online resources and, even just budgeting apps that are trying to enter the space and provide content as well. So, the big thing now is if you're gonna have any sort of website, you also have to provide some sort of content, any sort of, interacting. And I know that, LearnVest is one that I actually personally use, and and I met their founder about a year ago, and they offer, it's a budgeting tool, but they also offer videos. The CEO travels around the country and speaks to people, to crowds, companies, to different companies. There's things like the Khan Academy, where, obviously that's much broader in terms of the types of courses that it offers. But I think there's a lot of online resources that people can seek out on their own if they want to learn more about, how to invest in my 401k, how do I even start to budget, what if I want a mutual fund, those kinds of things.
Yeah, absolutely, and I think that personal finance aspect is a very important one to be thinking about. And certainly as a journalist out there are lots of story ideas around personal finance, around all these new budgeting apps, around how you become more educated, around your own finances. Also other ideas for journalists around what's happening in states. You mentioned states that require teacher training and those that don't. You talked about how the different standards in states. If I'm a reporter in a state, that's certainly something that I can look at and develop a good story or even series of stories around. So I want us to be thinking about these ideas for the journalists watching who are interested in this topic of financial literacy. I know CFPB has more thoughts about how to fix this problem, also some specific advice for parents. Do you want to go through the rest of your slides?
Sure. Let me respond just briefly to that last kind of question, which is, what else can we do, and what else could you be writing about? A number of employers now are starting to look at workplace-based financial education. Some of them have programs already designed to get people into the company 401k, but some of them are looking at the fact that people take money back out of their 401k if they have a financial problem or emergency. So they're looking more broadly at what they can be providing. The Consumer Financial Protection Bureau has a paper. You can see it on our website at consumerfinance.gov. We profiled some of the activities of some number of companies. We also have seen the statistic from the American Psychological Association that 7 out of 10 Americans say money is a top source of stress. And there are some very interesting numbers in that report about employees who basically admitted, I'm distracted at work because I have a money problem. So for America's employers who care about productivity as well as about their employees, it could be a low-cost way to get those employees' minds back on the job and to help them with things they're really struggling with. So workplace financial education, we think, has a lot of promise.
Yeah. Hadley, do you find that people contact you and say, I'm so stressed about my finances, or?
I don't think that, I don't know if I've had anyone contact me and say, hey, I'm really stressed about my finances, but it makes sense, obviously.
I think of the personal finance reporter as, the advice columnist for the money needy.
Well, it's interesting because I have spoken to a lot of young people about their finances, and I think about it 2 years ago, I did this big story about how financially illiterate we all were, and I talked to this one young woman who I think was about 29, and she just said, I feel like I'm supposed to be further along in my life at this point. Like, I shouldn't be having these issues. I shouldn't be dealing with how much money I need for groceries every week. Like, why haven't I figured this out yet? And the thing is, I don't think she's the only one who feels that way. So, I think that stress about money is kind of almost universal. I mean, which is why it's so important to feel like you have control over that. I mean, even if, I don't think you need to have a lot of money to feel like you can be in control of your financial life. And I think that it's learning tools and almost like coping mechanisms for dealing with that sets people up for success. Like, knowing that, I know that I need to log in to my budget, at least once a week, so I know, okay, my rent check is due this day, my student loans are due this day, what day of the month is that going to fall on, and I have to kind of budget it out and see, which literal day of the week those bills are going to auto deduct from my account so that I don't overspend. And it's just kind of making that a habit, right. I think is what's so important.
Right, so increasing financial literacy can reduce stress.
I hope so.
Okay.
Absolutely.
That's our story, and we're sticking to it.
Great. So, I don't know if I need to show you any more pictures. In K-12 and reaching young people, we know that starting early makes a difference for kids. Think about this. If you speak a language other than English or in addition to English, I bet you didn't learn it in one semester in high school. You learned it by starting early, by starting young, by hearing it at school and at home, and by having lots of opportunities to practice. And financial skills and the language of financial life is very much like learning languages in that sense. The earlier we start, the more chances we give our kids to be hands-on, and the more places where they can practice those skills, the better chance they have of success. We talked a little bit earlier about teacher training. There's a survey from the National Endowment for Financial Education showing that 89% of K through 12 teachers say financial education is so important it should be either a required course or a required test to graduate from high school. But a very small number of teachers said that they actually felt ready to teach it. So there's work to be done there. Finally, I'd just like to highlight a little bit more the issue of what we can do, all of us as parents and all of your readers as parents. And here's the takeaway, I think. You don't have to be a money expert to help your kids learn about money. You don't necessarily have to expose all the mistakes you've made to help your kids learn about money. But it's really about now versus later, needs versus wants. Every time you go to the grocery store with a child, there are things that you buy and things that you say, well, not this week. And that's an opportunity to have a conversation with your child. You're not doing it to deprive them. You're doing it because you're saving up for a car. You're doing it because you have, that bill coming in at the end of the month that has to be paid. And we have some information on our consumerfinance.gov website to help parents pick the right level of conversation to have with their kids. Of course, it's very individual. Parents will decide what to talk about with their kids. But sometimes parents say to us, well, I don't know, what's the right amount of information for my second grader? And so we have some information for that to help parents get that conversation started. And finally, we're all still children and our parents are still parents. So we have some resources in financial caregiving for people who are dealing with older adults that may be in great shape now but are looking forward to the possibility that they could have diminished financial capacity later. Financial capacity is the first capacity that goes, and so often the family doesn't know until other kinds of capacities start to fail, and then it's kind of too late. Someone has already stolen the money. So we have a set of guides called Managing Someone Else's Money, and they're for people like you and me who are suddenly asked to manage mom and dad's money, and maybe we don't have a clue what we're supposed to do and how we're supposed to do it. And we also have a piece for older Americans that we developed with the FDIC, a handbook called Money Smart for Older Americans, which goes into the common scams and says, here's how you can make sure it doesn't happen to you, and you can tell your friends so it won't happen to them. I'm going to just remind you that we have lots of resources. You can find them all at consumerfinance.gov, and of course, you can also find us on Twitter and Facebook @/CFPB.
Terrific. Thank you. I really appreciate it. And for those watching, this webinar is being recorded. It'll be available on the web, so you'll be able to come back and look at these slides at your leisure later on. I want to go back to something, Gail. I think you said earlier that as part of the website you have frequently asked questions. What are some of the questions people ask most frequently about specifically about financial literacy?
We get a lot. So these are questions designed for individual consumers. Mm-hmm. So the top hits almost consistently month in and month out are, how do I get my credit report? How do I get my credit score? Sometimes people ask us why their credit score isn't free. And on our Spanish site, we get lots of questions about how do I buy a house. We actually get more questions about home ownership there than on the credit report piece.
So looking at questions like that, how does financial literacy play into people being able to answer those questions? How far back do we have to go to fix that problem?
So people are coming to consumerfinance.gov and saying, how do I get my credit score? Already 3 steps ahead of the game. They know they have a credit score, they know it matters, and they want to do their homework to find out about it. So that's promising. We also know most people get their information from family and friends, so hopefully they're talking to their family and friends about what the credit score is and why it matters. I think we have to start as far back as kindergarten and first grade, needs and wants, and the idea that if you make plans and stick to those plans, you will get a better outcome for yourself. And kindergartens don't have to learn about money. They can learn that about storing up the points to, win their turn at recess or whatever it is, they're still learning that same life skill about planning and setting goals. And a lot of financial capability is really about goal setting. And people do get good results in their lives if they set goals and are able to stick to them, and that's hard work, and you need peer support for it.
It's interesting you say that about setting goals. I recently did a sort of mock conversation with a financial advisor for a story that I'm working on, and I told her, I want you to talk to me as if I'm your potential client, and just so that I can write about what it would be like to work with a financial advisor. And we talked for an hour. And I answered regarding my own life because it was easier that way. And, almost, I would say more than half the questions had nothing to do with finances. It was about, tell me about how you got your job. Do you like it? Do you see yourself staying there? What kinds of, where do you see yourself in 5 years? Are you going to get married? Do you want to buy a house? That's, I guess, more of a financial question. But it was more about, where do you see yourself in life? What kinds of things do you want to accomplish? Who do you want to accomplish them with? And how are you going to get there? So it was interesting because I think it was completely about knowing how to prioritize and knowing, how to set goals for yourself, and then realizing that there were ways to plan for how to attain those that did involve your finances, but all of the initial questions were more just about me and what I wanted.
Yeah.
So financial literacy is really a mindset, and the question is how we instill that mindset into more strongly in young people. You talked about parents, things that parents can do. The standard question is allowance. When do I start giving my child an allowance? How much do I give them? And I've had that conversation with many parents over the years. One thing that came up recently was a family who gave their children an allowance and encouraged them to try to do odd jobs and do work. And this parent said, we try to be very clear with our children about how much they're going to earn and how it's all going to work, but then they go out and shovel someone else's driveway for what they think is going to be, it's a $5 job, and the person just gives them a 20 and says, keep the change. That's not necessarily sending the right message. As a parent, what do you say to your child when they come home? Hey, I got $20 and I only worked for 5 minutes.
Let's go to the bank and open your first savings account. That's what I'd say. You have $20, let's go to the bank.
Right. Any other advice, Hadley, that you have for parents who are trying to make sure that their kids learn the basic elements of financial literacy?
I think that it's just a willingness. I mean, like what you were saying earlier about being at the grocery store, I feel like it starts with a willingness to talk about it in the first place. And to, exactly like you said, you don't have to say, these are all the mistakes that I made and here's why you shouldn't do that. But it's about finding those everyday moments, kind of back to what I said in the very beginning, that we make these we make decisions about money all the time. I just paid $4 for parking outside and, I had to pay 50 extra cents because I used the app instead of paying with coins. Like, those kinds of things, I made that trade-off because I wanted the convenience of the app. But, I think that it's just involving your kids in those kinds of decisions. I mean, I don't have kids, but, I would think that it seems to me like that is the first step, is being willing to talk about it.
Do either of you think that working largely in this cashless society that we've all gotten to with the parking app and credit cards, does that make it more difficult to keep track of your money or easier?
I think it depends on how you start. I think for our young people who are just starting electronically and don't know anything else, they'll learn how to do it. But there is one step less removed. You can see how many 1s and 5s you have in your hand. And so it may be that we'll have to try a little harder at the beginning to get kids kind of to think about that. And for anyone who's making a transition from one system to another, it's always hard.
Yeah, I mean, it's hard. I only know the cashless system in a way, and I love it, so I don't really want to go back. But I think that it's just about, so last fall I visited a classroom out in Maryland with a teacher that had gotten her county to require financial literacy education. And the lesson involved, you know, logging on to a virtual banking system and knowing how to use a website like that. And so I think that it's just starting out. They're already starting out by having to learn. It's just a new system you have to learn. You know, I've never balanced a checkbook in my life, so, and because I never had to learn that system, I've had to learn a different system. And you know, I do think there is something to be said for having physical contact with your money. I mean, I do sometimes forget about the one credit card I have that I don't really use that often, and then maybe I use it once and, you know, months later realize I never paid the bill. That hasn't happened that often, but you know, it is kind of harder to keep track of everything, especially when you have logins and accounts for, you know, what seems like endless number of websites.
You said something interesting. You said you've never balanced a checkbook in your life, and when I was growing up, balancing a checkbook was sort of the basic thing that you had to know about finances, how to balance the checkbook. Does anybody do that anymore? And I think there's a good little story there just for somebody. But
My mom does.
Yeah, I'm sure mine does too. I think in the balance the checkbook days, there was only one way money left you, and that was by writing a check. The principle behind it is look at all the ways money's leaving your account, and make sure you know all the ways it's leaving your account and when it's going out and how much it's going out. And that principle, you need that more than ever. It's just harder now because it's going out in more different ways. It might be going out by a debit card payment or a check or a pre-authorized debit and other ways.
right.
A fee. It might be going out through a fee.
I have a question from a viewer, and it's a little complicated, but we'll throw it out there. Could the panel discuss the role of behavioral economics in financial literacy? Incorporating behavioral economics seems as if it could be helpful, but also fraught with issues of who decides what are the right choices for individuals.
So a lot's been said and written in recent years on behavioral economics. If you read those books and look at those studies, they're talking about things that marketers have been doing for a very long time. You know, you put the choice you want the consumer to choose first or second. It's like that old story about the bottle of wine at the restaurant. People order the second most expensive bottle of wine or the second cheapest, I forget which it is. But they actually know from experience and from testing what consumers will do. And marketers are doing that. And if you are presented with a form, someone has actually thought through what they want you to pick and where they put that on the form. So in some ways, behavioral economics is, you know, economics speak for how do we catch up with what marketers have known all along? How can we make some of these decisions easier for consumers? So there's some promising things. Automatic enrollment in 401ks has increased the number of people who enroll. It hasn't yet increased the degree to which they escalate their contributions over time, but at least more of them are getting started because it's automatic. Right. So there are some promising approaches.
All right, good to know. All right, I see no more questions from our viewers. I know you join me in thanking our guests, Gail Hillebrand of the Consumer Financial Protection Bureau and Hadley Malcolm of USA Today. Do not miss our October webinar lineup. On the 8th, we'll be talking about health IT and its place in healthcare reform with Dr. Jacob Ryder from the Office of the National Coordinator for Health Information Technology, and advice from NPF favorite Jody Schneider on survival strategies for your journalism career on October 16th. The National Press Foundation's own Bob Myers has a fascinating interview with Ambassador Valentin Zellweger about how Switzerland is trying to give back stolen money and assets hidden there by dictators and others. That's October 23rd. Details are on the website, nationalpress.org. Sign up for the newsletter. And thank you for joining us in the Evelyn Y. Davis studios at the National Press Foundation, where we are making good journalists better.